All right, so now we are going to take a look at the rules of debits and credits. So that's my little air horn sound that I want to make sure you guys are paying attention. Debits and credits are massively important. So this is why accounting works the way it works. It's the system that accounting is based on. So this is so important. And we use debits and credits the rest of the course. So it's really important for you guys to pay attention here and to learn debit and credit rules as soon as you can. Okay, so we're going to kind of transition from step 1 till step 2. So remember back in step 1, we looked at what accounts were affected. Did they increase or decrease? Now, these increases or decreases are going to translate into either a debit or a credit, depending on the classification of account. So in step 2, we're going to determine debits and credits, and we're going to use these accounts to record journal entries. That is what step 2 is. So before we can get into step 2, we need to know about debits and credits. And before we know about debits and credits, we need to learn what a T account is. So you'll see here, this is a T account, and we are going to have a T account for every single account that we use. And it's just a quick way to show the effects of transactions on each particular account. So the first thing you need to know here, there will be a title for the account. So example, we could have cash here, or AR, or sales revenue, or advertising expense. Whatever the account is, it will be named here in the title. Now we also have always on the left a debit and always on the right a credit. But what these mean depends on the type of account. So you can see in this box here, debits are not good or bad. Credits are not good or bad. It's either going to mean that a debit increases something or it may decrease. Again, it's not always the same. It depends on the type of account that we have. But what is consistent in a T account? Debits are always on the left, credits are always on the right. So that is the first thing for you guys to remember. And these T accounts, they're just named that because it is a T. As you can see, we have a title bar and we have left and right. And these are going to be what we use as our general ledger in our course. So that will be in step 3. We'll get there in a little bit, but we needed to introduce these to know our debits and credits. Okay, so now we know debits go on the left, credits go on the right. But what does this mean? Well, these are the rules of debits and credits. So as I said, the impact depends on what account we're talking about. And these slides, I switched the orders back and forth so many times. I know if we look at this slide, it may not make sense yet. But once you get through the full set of videos, you're going to see all of these. We just kind of need to introduce them step by step. And at the end, they'll all make sense. But these rules of debits and credits are so important, as I said. This slide, or it's found in page 63 of the textbook, you're going to need to learn this right away. So we're going to use these all the time, but you won't be able to have these on your final exam. Yes, for now, you're able to use your books for assignments and everything, but these are items you need to remember. If you have to continually look back to this when you're doing your work, it's going to take you so much longer. So you need to learn these right away. All right, so let's go through what these look like. Well, you can see here that each of them have a plus sign and a minus sign, and that refers to increases or decreases. So a plus equals it will increase the account. A negative sign means it will decrease the account. So when we looked at our inventory, for example, some of them we had an increase when we bought it. Well, an inventory is an asset, which when it's going up, this plus sign, we would have needed to refer that as a debit. So that's what we will be doing. When we pick out our account, whether it increases or decreases, we then need to know, based on this chart, is it a debit or is it a credit? So any assets, when you need to increase them, you use a debit. If you need to decrease an asset in your journal entry, you will use a credit. The opposite is true for liabilities. So you can see right here, these are not always the same. It depends on the type of account. So to increase a liability, you actually credit it. And to decrease it, you would debit it. And the reason for the opposites here is because they're at the top here. This is the accounting equation. So our debits or our assets must equal our liabilities plus our shareholders' equity. And in that same idea, when we do the balance sheet, we'll see that our debits, which will be our assets, need to equal our credits, which are going to be our liabilities and equity. So that is why these are opposites. If we go through the equity part here, our investments or the owner's capital account that we looked at, to increase that, you will credit it. To decrease, you would debit. The opposite now is true for owner's withdrawals. And that's because investments and withdrawals have the opposite impact. Remember when we did the statement of shareholder or owner's equity, we added investments and we subtracted withdrawals. Because of that, they need to have opposite signs. So to increase a withdrawal account, you would debit it. To decrease it, you would credit it. And when we look at revenues and expenses, for revenues, a credit is an increase and a debit is a decrease. And again, these are kind of opposites. So the opposite is true for an expense. You increase it with a debit and decrease it with a credit. So again, as I said, it's really important for you guys to just learn this. It's something you can use to start, but debits and credits you need to learn and remember. So it's also important to discuss what the normal balance of an account is. And that is what we would normally see the balance to be on the trial balance, so which we'll get to in step 4. And the normal balance is always the side, either the debit or the credit, where an increase is recorded. So again, depending on the count, it could be a debit or a credit. So if we look back at this slide, we see that assets are increased with a debit. So debits are the normal balance for an asset. Liabilities are increased with the credit, so that will be the normal balance, and so on. So always where the increase is the normal balance. So we'll quickly write that out in here in a T account form. So the normal balance is in a T account. I'm going to move that up a little bit just so I've got a bit more room. Okay, so these are going to be our debits. Obviously, debits are always on the left, credits are always on the right. So that's very important. And if we go through all of our accounts with normal balances as debits, so where they increase are the assets, our withdrawals, and our expenses. So these are the assets, our withdrawals, and the expenses. Now, our normal balances as a credit are all that's left. So our liabilities, owner's capital, and our revenue accounts. So we've got revenues, owner's equity, or owner's capital, which also the investments. And then lastly, our liabilities. So the textbook on page 63 gives a little acronym that can be remembered. And I know this helped a lot of my students last year. So something for you guys to consider, if this will help you remember, is the roll. So assets, withdrawals, and expenses. A normal balance is a debit, which also means these are increased by a debit. Credit side, the normal balances are for revenues, owner's capital, and liabilities. So these are increased by a credit. So just a trick for you to remember, if this helps, you need to remember that you don't always debit an asset, a withdrawal, or an expense, but this is their normal balance, or where you increase it. If you were to decrease an asset, you would have to credit it. But this little trick is just remembering what the normal balances are, or how you increase these accounts. So just a little trick you can read in the margin at the bottom of page 63, and it will go over this. But it's really important to remember this when you debit, when you credit. So I just wanted to give you guys that little tip. Okay, so next we're going to go through continue with our example that we started in step 1. So we already went through and analyzed these two transactions. So we decided they were inventory was increasing, cash decreasing in the first one, and the truck increased and the bank loan payable increased in the second one. So there's a little bit more information that we'll use in step 2, but for now, let's just figure out, because of these, are they going to debit them or credit them? So if we look at inventory is increasing. Well, we know that inventory is what classification of account? An asset, liability, equity, revenue, or expense? Right, inventory is an asset. So we would look back here, just erase all of this for now, so it's easier for us to focus. So inventory is an asset, which is right here. And we said that we needed to increase that. So we find the plus sign here, which means that we need to debit this. So we can go back here. This will equal a debit. Now cash is decreasing in this transaction. So what does that mean? Well, again, we have to figure out what type of account is cash. We know that is also an asset, and it's decreasing. So now we're on this side. We're going to credit the cash account. For the second example, where we purchased a truck through a bank loan, we said we have a truck and it's increasing. Again, the truck is an asset account. It's something that has that future benefit to us. It's increasing. So like inventory above, this will be a debit. And now the bank loan payable. So payable, we owe someone money. This is a what type of account? Right, it's a liability. And it is increasing. So if we go back, we have a liability that is increasing. So this will be a credit. And one important thing that you should have noticed here that we'll get into in more detail in the next video is that we're going to always have debits and credits that equal each other. So you may have more than one debit account and more than one credit, but once we get through these dollar values, you're going to see that our debits and our credits will equal each other. So you always need to have a debit and a credit in each transaction. Okay, so debits and credits, they're so important, as I've said many times, and they're so important that there's actually a music video created about them. Just going to open this really quick and we'll take a look at this.
If you ain't willing to work hard, then can it? It's the most sought after job on this planet. Now, you tell me you wanna be an impartial judge of my solvency. Now, you tell me you wanna protect the world from corporate fraudulency. Now, all that sounds like fun, son, but you gotta walk before you can run. To know what these numbers mean, you gotta know the debit credit theory. Debits on the left, credits on the right, debit left, credit right, debit left, credit right. Complete satisfaction, balance all of your transactions. Debits on the left, credits on the right, debit left, credit right, debit left, credit right. Complete satisfaction, balance all of your transactions. Balance all of your transactions. So, if you really wanna know about your cash flow, where your money go, and give in to the temptation, understand the fundamental accounting equation. An asset increasing is a debit, an asset decreasing is a credit. The reverse is true for liabilities and equity. If you get this, then you get accountancy. Debits on the left, credits on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debits on the left, credits on the right, debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions.
That's probably enough of that. I'm sure, like you, or like me, you will have that song stuck in your head for the rest of the day. If you're lucky, it'll be stuck with you forever, so you'll never forget. Debits on the left and credits on the right. And you always need to balance your transactions, as they said in that video. So I know it's silly, but I hope maybe it will stick in your head and it will help you remember that when you're on an exam or doing your assignments and you can't remember. So debits on the left, credits on the right, and then you also need to know what those mean for each of the types of accounts that we have.